Jacqueline, I'll start with you. Your take on these numbers so far.
Hi, I think the numbers are disappointing, but if take a look, although the numbers are lower than consensus expected, but the consensus already expected a market slowdown and in November's activities. This is not surprising because a lot of cities experienced various degree of lockdown during much of November, which definitely take a heavy toll on economic activities from production to demand side.
So Jacqueline, the other question, I guess, as a follow there is, when do you think the activity numbers could be one of the same thing, bottom, and when do they respond to the reopening story?
Well, I think probably in March, we are going to see a more material pickup in economic activities. And number one, China is bracing for a new wave of infections. I think China's top epidemiologists, they expect the wave to peak around end January. So around the Spring Festival, I think consumer activity would stay tepid. Secondly, we think both the export sector and also the property sector are still searching for a bottom. And the next few months, we think economic activity will stay tepid. However, after this wave subsides sometime in the spring next year, we are likely to see more pronounced rebound in consumer activities, including activities in the property space.
How do you see the reopening really disrupting the economy first and foremost, Jacqueline? And, how forceful do you think policy support is going to be? Do they still need to stimulate more if the economy is opening up?
Yeah.
Yeah, first of all, I think the reopening will inevitably leads to a rise in infection level. And some people, they will have to be home quarantined for a week, which will bring some disruptions to productivity and to production and other activities. At the same time, some people will refrain from conducting some non-essential services out of concerns for contracting the virus that will also weigh on consumption and other activities. But after this wave subsides, we think consumption and activities is going to pick up. During this time, we think the policy will stay quite accommodative, including, I think, the monetary policy will keep liquidity quite flush, as evidenced by today's net injection of MLF. At the same time, the PBOC will work hard to pushing out credit to the real economy, especially to policy-favored sectors like SMEs, which is in difficulties now.
Yeah, Jacqueline, we do understand that this economic work conference that was said to be postponed is now back. And I'm going to get your thoughts on that in just a moment here. But in the meantime, let's bring in our colleague Stephen Engle, who's here with us in our studios to talk us through. So this meeting, we understand, is taking place, this Central Economic Work Conference.
Yeah, that's right. So it's held every year in December, early part of December. They set the priorities, and they usually, behind closed doors, set the economic or GDP target for the National People's Congress that's unveiled in the first week of March. There was speculation that it would be postponed. Sources had told Bloomberg News earlier this week that it would be postponed because of that COVID wave that we were just talking about sweeping the city. Nobody wants a super spreader event going through the Politburo and also the top provincial governors and the top heads of the big economic agencies, obviously. But it looks as though it is going ahead as planned. Obviously, with these set of numbers that we're seeing now, the economic recovery is fairly urgent to get domestic consumption as a top priority. We saw that on the front page of actually, it was a synopsis from Xinhua News Agency that I talked about just a few minutes ago, essentially saying the priority over the next 12 years, this is from the Central Committee and also the State Council, is to boost domestic consumption at a time when there's grave concern about the export situation.
I'm just looking at the TLI blog, and our colleagues are kind of talking a little bit more about the statement that came out from the National Bureau of Statistics, saying the foundation for recovery not yet stable. Enderkern is saying that's a pretty interesting admission of just how fragile things are in the economy right now, that they are saying things are still looking pretty shaky here right now. Jacqueline, I'll bring you back. It seems like consensus is growing that, growth is going to bounce back in a big way next year. And we're inching closer to those estimates to maybe like a 5% growth. Is 5% going to be kind of a long shot? Is it easily achievable for next year?
I think 5% is a reasonable and realistic target because that is on the basis of very low growth this year. Our forecast is this year GDP growth is only 3.2%. So if next year they can achieve 5%, that means two-year average is around 4%, which is materially lower than the 5.1% average growth achieved in 2020 to 2021. So we don't think this is a long shot, actually. We think this is actually a quite realistic economic target for 2023.
Right, so they can hit the target, just to borrow a phrase, they can hit the target in their sleep. Would you say there's upside risk to 5% growth next year then?
Well, at the moment, I would say the risk is actually quite balanced or tilt a little bit to the downside because we have concerns about external development because our house view is that in Q2 next year, the U.S. economy is going to slip into recession and the European economy is already in recession. So in November, we already had very bad export growth number. We think there's more weakness in store for the export sector. At the same time, we think now policy has turned very positive for both the property sector and other spaces, but it will take time to see this policy efforts translate into a rebound in economic activities. And also, we think the restoration of confidence will take some time. So next year, we think 5% is realistic, but it still faces a little bit downside risk.